Thank you for joining us at XM.com. You're watching today's market comment by Mario Suchikiriakos. I'm Christina Marujos. The U.S. dollar hit an air pocket this week, losing altitude without any clear news catalyst behind the decline. Incoming data continues to point to a U.S. economy that is running hot, with economic growth on track to hit 3% this quarter. The dollar's retreat might simply be a setback in a broader uptrend, backed by a U.S. economy that is outperforming the rest of the world. Minutes of the latest Fed meeting will be released later today and will offer the dollar a chance at redemption. Since that meeting, Fed officials have preached patience on interest rates, pointing to the resilience of the U.S. economy and warning that premature rate cuts would raise the risk of inflation becoming embedded. Recent data releases have endorsed this view. Thus, the underlying message might be that the U.S. economy is simply too hot for the Fed to cut rates in the near future. That's a signal that can put the wind back in the dollar sails. Gold prices are trading higher for a sixth consecutive session, riding the wave of a softer U.S. dollar. A weaker dollar makes it cheaper for foreign investors to buy the dollar-denominated precious metal, boosting its demand. This recovery will be put to the test today with the release of the FOMC Minutes. If they reveal Fed officials arguing against early rate cuts, that might prove negative for bullion and interrupt its winning streak. Elsewhere, assets with exposure to the Chinese economy are back in fashion after a heavy cut on mortgage rates yesterday to stimulate the nation's distressed property market. Chinese equities and China-sensitive currencies like the Australian and New Zealand dollars have been the main beneficiaries. Nvidia has been carrying the stock market on its shoulders this year, so its quarterly earnings today could have repercussions beyond its own shares. Expectations are riding high, with analysts projecting earnings to have risen more than 400% from last year, thanks to the artificial intelligence boom. The options market is pricing in a move of 11% in either direction for Nvidia shares today, which would inevitably leave a footprint on the entire stock market. This was today's market comment here at XM.com.